So we generally start work about 5:30. These days it's starting to get darker around that time of day and a little bit cooler.
Jason Watson is a 43-year-old truckie from Brisbane. He earns an average wage and he's worried about the size of his superannuation balance.
I guess as you're in your 40s and you start to assess where you're at in life and see sort of your finances and what your position is going to be looking like when you retire, I guess we realised that our super is not really going to, it's not going to be enough money for us to live a sort of comfortable sort of retirement.
He's decided to invest in property to secure his financial future, but the prospect of a Labor win at the election has spurred him to take the plunge.
We were looking at what we can do in the next year, but now we've basically got till the end of the year to try and find a property. I guess it's made it more rushed and we've had to really get cracking on what we're going to do.
The rush is because Labor is taking two major tax policies to this year's election which directly impact property investment. Labor's promise to end negative gearing for purchases of existing properties has received the lion's share of the attention. But Labor's policy to reduce the capital gains tax discount might be even more important, especially for people like Jason.
So have you got any idea what sort of price this would rent for at all?
I know there's been a lot of focus on negative gearing, but my feeling is that it's the change to capital gains tax, the discount there, that will have the bigger impact.
Currently, investors receive a 50% discount on the tax they pay on assets, including property, which are held for more than 12 months. So, for example, if Jason and Mel buy a house for $500,000 and then 5 years later they sell that house, making a $50,000 profit, they would only pay capital gains tax on $25,000 profit instead of tax on $50,000 profit. Labor wants to reduce the discount from 50% to 25% for people who buy after the first day of next year, increasing their capital gains tax bill.
What is the optimal level is always going to be subject to some debate. I think there should be some sort of discount in there, but in a world of very low inflation, the capital gains tax discount as it currently stands is actually quite generous.
Labor has been unapologetic in this campaign about wanting to tax capital.
Capital is taxed too lightly in Australia and income is taxed too heavily. And when the budget is in a proper surplus, we will look at income tax reductions across the board.
What taxpayers need to do is to keep a record of what they pay for things from now on.
It's a return to the traditional tension between the owners of capital and the working class. The Liberal Party was against the capital gains tax when it was first introduced in 1985. It then succeeded in halving it under the Howard government at the turn of the century. That helped push house prices to record levels.
I do think the capital gains tax discount was playing a role because, quite simply, investors were able to invest in property with some confidence that they'll get a decent return at the end through capital growth.
But economist Shane Oliver is worried that Labor wants to unwind the change at a time when the property market is already looking weaker.
But the danger is that changing the capital gains tax discount along with negative gearing could just add to downwards pressure on property prices, which in turn could risk underlying economic growth in the economy.
The real impact goes to the broader economy and fundamentally to the housing market. So it doesn't just affect investors, it affects you if you're a homeowner, it affects you if you're a renter, and it affects you if you work in the construction industry.
Yeah, I guess I'm just really trying to look at being a bit more financially free and not, living solely off my salary. Just really trying to invest in my future and look at options that can give me a little bit more freedom down the track. I think the property is something that might be a good way to start with that as well because it's always going to be there.
Simone Barons is a naturopath living in Sydney. She too sees property as a way of securing her financial future. Simone already owns one investment property which she rents out in Canberra. She's now looking to buy more property.
I'm in the process now of looking at my next one that I will, try to obtain in the very near future. And then if things permit, I'd also like to try to get another one by the end of the year, depending on if that, is viable.
Stephen Koukoulas is a former economic advisor to Prime Minister Julia Gillard and was a Treasury official. He says although Labor's changes will lower investor demand for property, other factors play a bigger role in determining prices.
But as we've seen for the last 30 years, when the capital gains tax was introduced and then the concession was introduced, there are other factors at play. Really important are the level of interest rates, demographics, supply and demand are important in driving house prices.
This week, the government announced it would provide a deposit guarantee for first home buyers, which Labor quickly backed. And those first home buyers might find there are fewer investors to bid against if Labor's changes go through.
Now, there is still a huge pent-up demand from first home buyers who have been squeezed out of the market for the last 10 or so years because of affordability issues. And when they turn up to the auction, they're competing with an investor.
But the Shadow Treasurer says this election policy is about restoring the tax scales in favour of lower income earners.
So this is a highly regressive tax concession which needs to be reformed. If you get your income from, working in a factory or an office, you pay your marginal tax rate. We accept there should be some sort of a discount for capital gains, but the 50% discount, which was designed in a very different era, is no longer fit for purpose.
Some investors may be looking to rush in to buy, but that doesn't necessarily mean it will revive a flat property market.
There is a chance that in the short term, the period out to the start of next year, investors will rush into the market to get grandfathered. But that's not clear that will occur. It depends on how investors think about it. If investors worry that when it comes time to sell their property, they'll have less demand because there'll be less investors out there, then they may not rush in.
We don't have many opportunities to create wealth for ourselves when we do get to retirement, and they're really making it a lot harder for us as well.
Hi, I'm Lee Sales. Thanks for watching this story. If you'd like to watch more of 7:30's stories, they are on the left of your screen. And tap on the button below to subscribe and get the latest from ABC News.